This content is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All hypothetical examples are for the purposes of teaching principles and are not intended to suggest future results. The risk of loss in trading securities, options, futures, and forex can be substantial. Customers must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Any results shared should not be considered typical.
Welcome back to session 2 of the Ultimate Trading Summit. I'm so glad you're here. I was telling those that were the super early birds, class 1, it's my responsibility to get you to class, to send the reminders, to send the Zoom links, to make sure everything's wired up. Class 2 is your vote on whether class 1 was good enough to come back to. So it always is something I appreciate when people come back, because it tells us that we were able to add value in the first session together. So without further ado, let's dive in here. Of course, the training's for educational purposes only, yada, yada, yada. Here, let me summarize it for you. If you play stupid games, you win stupid prizes. Please don't do that. If you missed class number 1, it is okay. Just checking my screens here. I just realized my one of my screens is going bonkers, but I think I can handle this, and I'll fix it when I hand it over to Scott in just a second. If you missed yesterday, it's okay. The recording is available for 7 days. If you're not VIP, if you are VIP, then you have lifetime access to the recording, and none of the content is necessarily cumulative. So class 2 doesn't build on class 1. Class 3 doesn't build on class 2. Each one is its own individual unit. So I encourage you to come to all the classes, but I also encourage you, if you missed class 1, you're not going to be behind tonight at all. If you did miss last night, real quickly, I am the founding trader here at Tradesmart University. I've had the privilege of working with lots and lots of people over the last 15 years, a decade and a half. That's crazy. And I'm the manager of the public TSU trading account. Yesterday, we said the outcome of the Ultimate Trading Summit is to help you learn how to make your first or next $25,000 trading. And if you were here, we remember said, let's get real about this. We've seen shenanigans out on YouTube, all of the empty promises that are made. I get it. I am worn out by that too. In fact, I took some screenshots in yesterday's session and posted them so we could ridicule them mercilessly. Let's be real for a second. I'm going to put some benchmarks out there. I'm going to assume that you achieve a 70% win-loss ratio. That's kind of my lowest denominator of success, lowest common denominator of success. If you can't hit 70%, I've got some resources for you coming up in just a second. In addition to that, I'm going to assume that you put some guardrails on yourself and risk no more than 2% of your account on every trade. Now, that's not, you're only investing 2% of your account. There's a difference between return on investment and return on risk. If you don't know the difference between those two, you need to sign up for the Foundations Apprenticeship, because there's a huge difference between return on risk and return on investment. I'm going to assume that you are risking 2% of your account on any given trade. That's a standard. And we're going to target an average of 3% gain on every trade. Those of you that have been around will recognize that in our little TSU lingo as a 1R risk and a 1.5R average return. I'm going to assume you're like me and want to place about 5 trades a week. Maybe you're like Taylor, our resident day trader, and you want to place 50 trades a day. That's not my game. That would wear me out. I place about 5 trades a week, 3 on Monday, 2 on Wednesday, sometimes all 5 on Monday. You can place more if you'd like. You can place less if you'd like. I'm going to also assume that you've got about a $20,000 trading account with the proven system to generate that kind of a win-loss ratio and the strategy to put 3% cash in your jeans. And with 20 grand and with a little bit of guidance from a mentor, how many weeks would it take to make $25,000? For real. Those of you that were here yesterday know the answer. About 23 weeks, just over 100 trades. Now, yesterday I said, some of you guys, that makes super happy. Let's go. $25,000, no big deal. My experience, however, is that probably 2/3 of the class just got super sad. And you think, well, Josh, I don't have $20,000, or my spouse won't let me trade $20,000. Or if I'm candid with you, if I'm sincere right now, I'm a little bit nervous about trading $20,000 of my own money. Did anybody feel that yesterday or tonight and think, that's where I'm at? Go ahead and punch in one of the emojis. I see them coming. Use them liberally. I understand that. And it was about a year and a half ago that we developed a partnership with a funding partner, and we now have the ability to fund our traders. I wanted to repeat that tonight for anybody who's brand new here, because it's of utmost importance that you understand the problem that is figuring out the system, the strategies to put fat stacks of cash in your jeans. Don't worry about the trading account. I literally can put a trading account in your hands before we finish tonight's webinar. Now, for those of you that are interested in that, at the very end, I'm going to talk about what that trader funding program looks like. I'm going to give you all the details. Some of you are like, oh my gosh, how is this even possible? How does he give me $20,000? My favorite question was, do I pay taxes on that? Let me encourage you. No, you don't have to pay taxes on the $20,000. And it's totally optional. Totally optional. But please, for the love of everything important in your life, work with our money so I don't have to lay awake stressing at night if you're going to do stupid things and win stupid prizes. Our system has guardrails all around it so that you can't hurt yourself. I'll say this again later tonight, but Hertz Rental Car does very well as a business, even though some people have accidents in their cars. And guess what? Our funding partner that we work with and the guardrails that we have collectively around it work very well, and we're able to do trader funding, even though some people have an accident every now and then. That's for our funding partner to deal with. Your job is to master the system. Now, literally today I was on Facebook and I saw this picture and I thought, huh, that's literally an actual photograph of a trader that's following the dysfunctional trader's journey. Probably. It's a train wreck. I meant to write down, shoot, and I've closed that page now. Somebody will Google this. No, actually, don't do that. I don't want you to get distracted. But tomorrow I'll come back and tell you where this photo was taken. It was the late 1800s, and the locomotive literally like ran through the train station and came out the other side. Total train wreck. In the trading world, this dysfunctional journey that people are on look like this. They fall for YouTube clickbait. Truth and sincerity on YouTube does not drive clicks. Sensationalism drives clicks. It's the same thing with your news media, by the way. I hate to break it to you. What's the job of a newscaster? To drive ratings so they can get commercial revenue. It's the same thing the YouTubers are doing. The dysfunctional trading journey says, I'm going to click on the YouTube clickbait. I'm going to risk all my own money. Some of y'all that are incredibly foolish risk money that you don't need to be risking. And then you follow advice from a buddy who's equally as broke as you. I'm telling you, I see it all the time. A friend at work found a hot tip on YouTube. And the most dangerous version of this journey is they found a hot tip on YouTube and it worked once. For those that are coming in late, we had a little icebreaker where people described with one word what their ideal trading strategy would be. None of them were described as inconsistent or one-hit wonder. It's hyphenated, so that counts as one word. One-hit wonder, all hyphenated. That's not the ideal strategy. That led us to this screen here in the two most important formulas that I can give you. The first one here is the empowered trader's journey. I want to call it something different because that's what Valerie called her apprenticeship, and it was such a freaking good name. I just want to use it all the time now. Thanks a lot, Valerie. jerk friend. No, I'm just kidding. The empowered trading journey, to contrast with the dysfunctional trader's journey, is a proven system with a funded trading account that's not your own life savings, multiplied with mentorship, the guidance of a pro that's been there before. And I want to focus down here. The theme of the Ultimate Trader Summit is this proven system: analyze, strategize, monetize, maximize. Night 1, 2, 3, and 4. So I want to circle briefly back to last night, analyze, and give you some benchmarks and guardrails for how this looks in real life. You might need to work on your analysis if your win-loss ratio is not 70% or better. So let me calibrate this. If you are brand new to trading, your win-loss ratio is not 70% or better. This is where you start. The problem is the broke buddy in the cubicle next to you is convinced that you start with a strategy because strategies get clicks on YouTube. But if you have inconsistent abilities to forecast where a stock is going to go, there is no strategy under the sun that's going to make up for that handicap. You're going to be doomed from the start if you don't have those analysis skills. So this is your benchmark. If your win-loss ratio is not 70% or better, you need to be focusing on things like this: support and resistance. Rebecca mentioned it yesterday. Trend lines. Rebecca mentioned it yesterday. Candlestick patterns, chart patterns, the most basic of pivot points. Basic wave analysis. I'm going to talk about that a little bit later in today's session. Trend indicators, momentum indicators, volatility indicators, and volume indicators. Caden talked about each of those 3 in yesterday's session. Let me help guide you a little bit as you think about what your next step is. All of these things are covered in Foundations of Trading. If you're generally a beginner and don't have a win-loss ratio of 70% or better, you need Foundations of Trading. If you're a beginner and you're scared to death of what a stock chart is or how a brokerage works, then you need to back up to Start Smart with Rebecca. Now, some of you guys have been around a little bit and you've experienced some success, and maybe you're right at that 70% win-loss ratio and you're ready to take that next leap forward. You need to be thinking about things like divergence, volume, Fibonacci analysis, geometric analysis, Gann angles, higher candle close, lower candle close, pitchfork analysis, floor trader pivots. Some of y'all think I just spoke a foreign language right now. No, it's English. But it's the language of Scott Landers in the Traction Apprenticeship. This is the next step for you after you've mastered some of the basics. All right? I want to put an anchor down there. We're going to move on from analysis, but that's your benchmark. Win-loss ratio. The solution to a bad win-loss ratio is technical analysis. Analyze. Now, today, this is where we're heading. Once you know how to forecast the stock, you've got to be able to turn your forecast into fat stacks of cash in your jeans. Tonight, we're going to be going over the good strategy versus bad strategy. We're going to talk about the calendar range strategy. Scott Landers is going to be leading us through that. Then we're going to talk about personalized strategies to your unique trader DNA. All of you have a superpower. And Valerie is going to help connect that innate superpower that's within you with a proven strategy so that you can gain an edge in the market. By the way, today is Valerie's birthday. Literally, today is her birthday. I had no idea when I scheduled her. So be sure to wish Valerie a happy birthday. And at the end of class, we're going to wrap up with some details about trader funding. So real quickly, how am I doing on time? Oh, I'm doing great on time. Let's talk about a good strategy versus a bad strategy. A good strategy in the world of stock trading has 3 parts. Number 1, it identifies where energy is flowing in the market. This is where strength meets weakness. I'm going to go through each of these. Number 2, by the way, fun fact, we have exactly 123 attenders here. That'll be about 200 here in 5 minutes, but I like numbers that are meaningful, like 123 or 111 or 1111 is my favorite time of day. I know it's super weird, but squirrel. A good strategy identifies where strength meets weakness. The second hallmark of a good strategy is it defines a cohesive set of specific and coordinated actions. And then lastly, a good strategy protects against failed outcomes. I even said the failed outcomes. It's not a question of if, but when a trade goes against you. By the way, take a screenshot of this right now if you're not a VIP member, because it's about to go away. And rather than stick our heads in the sand and hope a trade never goes against us, let's just plan for that inevitable outcome so that it's part of the process moving towards our ultimate goal. So let's dive into each of these individually. Part number one, strength versus weakness. To teach this, I'm going to use a story. I need a volunteer. Who wants to be a volunteer? You would have to type that in the chat pane. I forgot to put in my my orientation slide. Thank you. No, not Rebecca. Who else wants to be a volunteer as a tribute? Have you guys seen Hunger Games? Now I'm going to have to flex my muscle of being awkwardly quiet until somebody volunteers. Fred volunteers. Oh, and then Deanna. Deanna was more emphatic. It said, pick me. All right. I told you I can be awkwardly silent until somebody volunteers. Okay. Deanna's going to be a great sport for this, I can tell. So imagine Deanna. She has gone through Start Smart. She's gone through Foundations of Trading. Deanna has her analysis down pat, and she's ready to place a trade. Now, when Deanna places a trade, an interesting thing happens. Let's assume that Deanna is buying shares of a company. Well, if Deanna's going to buy shares of a company, the person on the other side of that trade must be selling shares of the company. It's like being on Facebook Marketplace. I just bought my middle son a drone on Facebook Marketplace, and for me to be able to purchase that drone, somebody had to be willing to sell it. And for Deanna to be able to purchase her 100 shares of Apple, somebody else had to be willing to sell it. Now, the question is, who's on the other side of that trade? If on the other side of Deanna's trade is Sir Searches a lot, clicking on the most recent clickbaity strategy on YouTube, Deanna, with all of her Tradesmart knowledge, stands a pretty good chance of beating Sir Searches a lot. I'm rooting for you, Deanna. But the problem is, if the person on the other side of the trade is Warren, the godfather of the stock market, Buffett, Deanna, I love and appreciate you, but I'm with Warren. There's no amount of capital that you're going to be able to muster, regardless of whether I give you a funded trading account or not, that's going to be able to compete with the godfather of the stock market, Warren Buffett. So to illustrate this a little bit more, let's take a look at what actually happens here. When Deanna gets thirsty for a stock, she thinks to herself, I'm thirsty for some Amazon stock. And so Deanna goes to the stock market vending machine and she puts in her $2 and hits the button, and boom, out drops a bottle of Amazon stock. This is metaphorical, of course, but you all knew that, right? Piece of cake. There's no restrictions. Deanna saw the vending machine. She said, I'm thirsty for some stock. You put your $2 in, you hit the button, the stock comes out, transaction's done. But when Warren, the godfather of the stock market, Buffett, gets thirsty for some Amazon, he buys a freaking cargo ship of it. And the problem with this is we can all see the cargo ship coming into harbor. You can see it miles and miles away. Warren also, by Securities Exchange Commission, has some regulations around him on things that he's required to disclose. You can see it. So when Deanna is just discreetly going to the vending machine and hitting the button and getting her bottle of Amazon stock and nobody knows what happened, Warren is bringing in a cargo ship and he's got to deal with that. And one of the ways that Warren deals with that little situation is by waiting for Amazon to get to a low. This is actually United Health Group, not Amazon. I've taught this now for like 3 years and just realized I mixed metaphors. I should go back and change that. Don't laugh at me. That was Rebecca's little smiley going right up there, I'm sure. But Warren waits for the Amazon price to come on down, and he says, you know what? I'm going to offload a pallet of that water from my cargo ship. And when Warren buys, what happens? You guys know this in the world of real estate. Everybody wants to put their house on the market in the spring. Why? Because everybody that's moving is wanting to buy when the school year is out. When there's a lot of buyers, it drives the value of a house up. And the same thing is true in the stock market. If you have a disproportionate amount of people wanting to buy Amazon, then sell it, it's going to drive the price up. So Warren, the godfather of the stock market, buys a bunch of Amazon and it drives the market up. But then eventually the pallet's unloaded, the buying stops down, and guess what? The price kind of trickles on back down. I hit my button too early. So you guys see the point here. Warren's savvy. When the price comes back down, guess what? He buys again, shoots the price on up. And then the price kind of trickles on down as the buying pressure lets up, and then boom, Warren times another purchase, and the price of Amazon goes up, and then the price kind of trickles on down, and boom, Warren buys some more Amazon stock. Now, my friends, you have two possible reactions to this. One could be like an entitled person and think to yourself, well, that's not fair. He's manipulating the market. Scoundrel. You could think that, and it's not going to do you any good. Or you could learn to spot the clues of when Warren, the godfather of the stock market, Buffett, is buying himself some Amazon stock and driving it up, and then you just get in right here, and right here, and right here, and right here, and you ride his coattails all the way on up, putting fat stacks of cash in your jeans all along the way. That's my strategy, friends. Leave it to the complainers and naysayers. They're the ones that are trying to buy right here. And you know how you can spot somebody who's a naysayer? They say incredibly stupid things like, well, the market maker was just running my stop. Friend, I love you, but the market maker could care less about your stupid little stop on 10 shares of Amazon. I promise you. Now, do they have some tactics? Yes, and there's some algos at play, and you need to understand the environment that we're operating in. But at the most basic fundamental level, what if we just rode Warren's coattails? Here it is on a bumper sticker. Take a screenshot of this. Might be the most important thing I tell you all day. Big money starts and ends a move. Retail money, that's you and me, either participates or fights that move. By the way, the big money is the strength part. I want to be on the side of strength, not weakness. Now, this happens so frequently in the stock market that there's an actual theory written about this called wave theory. And it's a very useful framework for understanding when you should and when you should not trade. And generally speaking, wave theory says this: the market tends to go in its dominant direction. Let's just say up for now, because that's the easiest for most people to conceptualize. It goes in the motive direction, 5 waves, 1, 2, 3, 4, 5. Goes up, it comes back, goes up, it comes back. Rebecca did such a great job of this yesterday. Whoops, let me draw that a little straighter. Drawing the little channels and bumper bowling, and the ball goes back and forth, and that's what that is. That's your 5 motive waves. And then it tends to come down in 3. And this whole thing is fractal. If you were to zoom out, all of the larger moves are made up of smaller moves of these 5 and 3 patterns, 5 and 3, 5 and 3. Here's my recommendation to you. Don't try to trade wave 2 and don't try to trade wave 4. Those are what we call retracements. Fancy word for it comes back. And don't try to trade the corrective wave. So this big one on the left is called the motive, and the one on the right is called the corrective wave. Don't do it. The people that literally wrote the book about wave theory say we don't really understand corrective waves. So here's your job. Understand when a corrective wave is starting and run away. to quote Monty Python. Here's where you put cash in your jeans. Wave 3, wave 5, and a wave 1 if you can spot it. If you're Scott Landers, Scott's the real godfather of the stock market, by the way. Warren is just his puppet. These things pop in my head, Scott, and out my mouth before I filter them.
I am so worried right now.
I think Scott Landers coaches Warren Buffett, if I'm truly candid. If you're Scott Landers, you can spot a wave 1. Me, I'm kind of happy with wave 3 and 5, mostly because I'm lazy, but also Scott Landers is just that good. That's it. That's what I trade. Now, I'm going to give you the secret to all of this. And by the way, it's 1/2 of the strategy that I told you hits a 90% win-loss ratio yesterday. You ready for this? I'm going to show you my favorite thing. I probably should charge about $10,000 for what I'm about to reveal here. But it's so simple, I would feel bad doing that. Here it is. It's my favorite little indicator. Caden designed it for you guys in the session yesterday. If you missed it, you can go back and watch his recording. This is a stochastic indicator with all of the default settings on it. I challenge you, go find any stock. Now, listen to everything I say. This is very important. You must find a trending stock. Half of y'all just forgot that, and you're going to not understand why you're frustrated that this isn't working on your charts. You must find a trending stock. Let's say a bullish trending stock. And then you look for stochastic below 20. In a disciplined stock, meaning it's not wacko, Bud Light's an example of, or a Bud, I guess is the company, is Budweiser. In my opinion, is an example of a not very consistent stock. You know, nothing against the company, it's all over the place. But a nicely disciplined, consistent, bullish trending stock. Warren Buffett, I think Warren's come to my classes and he has an alert set when stochastic gets below 20, he knows to buy, because I'm out there teaching the masses that when stochastic gets below 20 and there's a couple other little indicators that line up, that's the time you buy. You ride Warren's coattails. I just gave you a very basic strategy that, when paired well with risk management and all the other protocols, will put fat stacks of cash in your jeans. This strategy is included in the Foundations Apprenticeship that Caden teaches, if you want more details on that. So let's talk about how you find strength. Now, I don't want to give you intellectual whiplash here, but step 1 in the strategy process is forecasting, finding the strength, knowing which direction the stock is going to go. And here's all the different things that we can look at. We can look at the trend, direction, and strength. Rebecca did such a wonderful job teaching that to us yesterday. You can look at technical pivot points. You can look at volume, which is a measurement of how much people are participating with a particular move. You can look at momentum, which is giving you a measurement on the speed of change. You can look at volatility, which in my opinion is a measurement of the normalcy of a move, and on and on and on. That's the forecasting side of it. Once you have the forecast, you find the strength versus weakness, then you move to specific and coordinated actions. Be candid. How many of y'all, maybe you've got a 70% win-loss ratio, you see the trade and you're like, you freeze. A lot of us do. So let's talk about how to solve that paralysis problem. Here's some questions you need to answer. I would say you need to answer all of these plus a few more. Where exactly do you get in? How much of your account are you going to trade? When do you exit a trade profitably? When do you exit the trade if things are not profitable? Do you allow adjustments along the way of a trade? And what else? I have about 15 of these questions that I answer in my personal trading plan. I would take a screenshot of this. It's a very, very good place to start. And when you're finished, in my opinion, there may be differing opinions on this, you should be able to write your strategy on the back of a napkin. I don't know who at the beginning of class said they wanted their strategy to be simple. I totally agree with that. I don't know if it'd be the only word I picked, but it's a requirement of mine that every strategy is simple. And if it takes you a book, I literally got a 25-page thesis, for lack of a better term, from somebody that was a trading strategy. And I got through the table of contents and threw it in the trash. I'm like, this is ridiculous. I need something that if I go to heaven, my wife can pick up this sheet of paper and know exactly how to exit the trade. She never would. She'd call my sons up and be like, hey, dad's gone and could you exit his trades? I think she'd be a little bit more emotional than that if I'm really thinking through that in my head. But nonetheless, here we are. So the trade setup. This is for a strategy I call the morning glory. On a 15-minute pre-market chart of SPY, that's the S&P 500, all pre-market volume bars need to be below a certain point. No more than 4 bars can be above a certain point, and the gap on the session needs to be exactly a certain point. I blacked out the numbers because, candidly, I spent $2,000 on this strategy, and then I made it even better. So you don't get it for free. I love you, but not that much. Then here's the trigger on the trade. 15 minutes before the market opens, if it's a qualified trade, enter with a market order. You can trade ETFs, inverse ETFs, leverage ETFs, or options. You're going to learn about options with Chris Burgess in session 4. He's got an amazing apprenticeship on options trading. Stop option 1, not to be confused with trading options, but stop choice number 1. If the gap is under 2 points, do this, etc. Option number 2 for your stop. For the SPY, if it's this number of points, the stock is equal to, or the stop is equal to fill in the blank, etc. You guys see where I'm going with this. I don't need to belabor you with reading everything. The point is, it's very specific. If I took the black bars off, even if you didn't know anything else about how to analyze this stock or this strategy, you'd be able to execute the strategy. Here's the fun facts. Probability without artificial intelligence assistance, it's a 65% win-loss on Monday, 77% on Tuesday, 79% on Wednesday, 82% on Thursday, and 78% on Friday. All of these move up to 90% or better if you also pair them with artificial intelligence. That strategy is available in Foundations of Trading if you want to learn more about that with Caden. Now, for the real godfather of the stock market. Ladies and gentlemen, let me introduce to you Mr. Scott Landers. Scott is what I call the strategic consultant. Funny fact, those of you who registered for VIP, you probably saw something interesting. On Monday, Tuesday, Wednesday, you had sessions at 9 a.m. Eastern. And you also, on Monday, Wednesday, had sessions at noon Eastern. Except Tuesday, it's the one oddball. The reason it's the oddball is because Scott Landers had a coaching call set up with a hedge fund that's working towards billions of dollars. Scott will give you the exact number. It's a freakishly large sum of money, and Scott is the primary coach on that account. And he was like, Josh, I don't really know if I can reschedule that trade. It's the beginning of the year. There's a lot of trading decisions. I'm like, bro, it's okay. You can do your VIP session at 2:30. And Scott was like, that's sweet, because we'll be able to trade the back half of the market. So y'all should look forward to that on Tuesday. So my dear friend, one of my best friends in the trading industry, Scott Landers, over 30 years of experience advising hedge funds and working with retail traders worldwide. Retail traders, if you're not aware, that's you and me. If you don't know if you're a retail trader or not, you're a retail trader. You would definitely know if you were not. He's the creator of 6 systems, turnkey systems, but I didn't have room to write that word in there. 6 turnkey systems used by hedge funds and retail traders alike. And then I kind of labeled this as he's the skip the stall guy. We noticed something interesting. We were very good at getting people to a certain level of success, and then they would kind of plateau there. And Scott came on board about 3.5 years ago, and we designed this mentorship experience called Traction, and it has gone like gangbusters. In fact, if you've been with Scott now for 3 years in his apprenticeship, you can just make yourself known in the chat pane. And he is a absolute expert at helping people get to the next level, and get trader traction, which is what the name of his actual apprenticeship is. This is an advanced apprenticeship. If anything I said up until this point is remotely confusing to you, you're probably not quite ready for advanced. Now, you're welcome to test it out, and we'll talk a little bit about what that looks like. I don't want you to miss out on it, but but Scott's not teaching you what a candlestick chart is, if you catch my drift. Scott is teaching you how the hedge funds are analyzing charts and how you can ride their coattails to profitability. And with that said, I've asked Scott to come on board and teach a topic called the J&J calendar ranges, because this very much is driven by those large institutions. So would y'all light up the emoji panel and welcome to the stage my dear friend, Scott Landers.
Thank you, sir. Do you see what's on the screen?
Nice.
Notice when that was taken?
Saturday,
Not just the time. Do you know
1-1-1-1-1.
January 11th, 11/11?
Yeah, so it was.
Do you know what the odds of that would be in my life?
Uh-oh, is that my internet or Scott's internet?
I hope it's yours. Can you hear me? Y'all hear me
I think
okay?
it was mine. I'm gonna turn my video off.
Okay. So I had to say that for you because I just took this the other day. Thank y'all for being here, guys. I have about 17 minutes, and we're going to go through some unexpected advancements tonight that I didn't tell Josh we're going to do until, like, I don't know, 35 minutes ago. So here we go. Y'all can hear me. Everybody's good? No problems? All right, let's run. All right, guys, here we go. So this is the reason I do what I do. Those are my three about 2015 in fall, and then this is 9 years later, roughly. That is Brooklyn and Mason and Grace Ann. Brooklyn's got her permit. He's in college, about to finish next year. And guess what? Finance industry. And then Grayson will graduate next year from high school. So that's my three reasons. Do you only write or profitable? If you're going to write anything down tonight, you might want to write this one down. Okay. Do you write or profitable? And I think for a lot of traders, they get this messed up in their head. I cannot do justice on psychology, guys. I literally have like 16 minutes to go. But if you learn to focus on being the get the ego out of your way, which a lot of traders struggle with. This is what I always have to come back and deal with. People get great systems in place. A lot of you have great systems at TSU already, but your ego tends to get in the way. And we could spend an hour on this. I'm going to run through a handful of slides. You do not need to take notes on these slides. I'm going to get to the meat of what you need to talk about here in a minute, or you won't understand, okay? This is what's called frame and filter, okay? This is something I introduced at Nashville in our first Nashville series, and this is actually taken from that, and you will see where coin actually bottomed out, and there's a logic of how we figure this out. The question really comes up for a lot of you is, can you do this? And I don't mean the geometrics, but this is actually taken from a student of mine outside of TSU who uses the same things I'm teaching, whether it's in the traction series or the pro series. That's a cube structure that we build out in a very specific way. They learn in pro so that somebody can identify where a stock is going to run into trouble before it gets there. I do a lot with forecasting. I have to do it with hedge funds. We deal with ES. I deal if it's market outside of bonds, which I just don't deal with in retail. This is kind of what I focus on. This is how you identify liquidity hunts. That term is thrown around very unfortunately loosely all over the internet. And it's very difficult for a lot of you to actually identify what I teach in pro. Actually, they can identify liquidity hunts. The other piece that you see right here is what you actually see in traction. Can you do the Fed box? This is something I've taught numerous times at Tradesmart. This is something else that realistically you could create. Finding these circles so that you know in advance where a 0-point turn is coming in. This is actually from the Pro Series. This right here is another, just to give you an idea of things that you can do forecasting wise, right? Could you create this? This is before the move, not after. This is actually a forecast, right? The tunnel through the air kind of concepts where you can actually see these boundaries and support resistance before they get there. Could you sensitize things to different levels? Not asking you to do all this. That's not what I'm here to teach you tonight. But when we talk about where can we take you at TSU, this gets into some of this is so simple, a room full of first graders could do it. This is the picture of Bitcoin. Since I've been at TSU, this has been shown so many times of how you can literally measure this to figure out these targets in advance. This was actually shown when I first started at TSU. None of this is hindsight, guys. This is done for a client of mine. They've actually seen this in the Pro Series. This is actually, and some of it's taught in the regular traction series. This is actually before the 400-point crash because of a client of mine when we're looking for this down here before SMCI split. There are three things you're going to take away from the night. One is the quarter jar. Secondly is counter ranges. And three is HCC LCCs. The only thing I'm supposed to teach you is counter ranges. The reason I bring this up is I want to help you have something more complete and composite in about the next 10 minutes, and this is going to go fast. The HCC LCC is something that Josh has incorporated into his morning glory strategy. I'm starting the quarter jar because I'm going to get through this in about 90 seconds. What I want you to do is find a clear mason jar, glass jar, whatever works best for you. Either use pennies, quarters, all depends on what you want to do. Do not use sticky notes. Do not use dollar bills. If you do, use $100 bill. And your spouse, at the end of all this, she keeps all the $100 bills that go in the bad jar, and she's happy. Why do I teach the quarter jar method? This is my original work. I developed this to help traders about 20 years ago. I've been doing this in this industry as far as I started in 1983 at the age of 13 as a kid. And I've been through every event from 87 crash on since then. I have learned by this school of hard knocks, to say the least. So why did I introduce the quarter jar? Because a lot of you have incredible systems when you came to TSU, but what's problematic is what's between the ears right here. So if you'll label one good jar, bad jar, every time you take a trade, doesn't matter if you make money or lose money. I know you all want to make money, doesn't matter to me. If you follow your trading plan, your frame to filter from start to finish, okay, everything you're supposed to do, set your stop, know your risk, put your targets, follow your trails, everything you're supposed to do, you put a quarter in good jar. If you don't, put a quarter in the bad jar. Every quarter goes in the bad jar. I want you to go back behind yourself after that trade is done. And I want you to total up how much money you actually left on the table, realistically speaking. Most people find out they'll throw up afterwards. It's so atrocious. Why do I implement this? Because one, I'm not here to keep you guys on the proverbial hook. I showed you my 3 children that I love like oxygen. They are why I do this. I'm not looking to adopt you guys. Okay. Love you, but I'm not adopting you. This is to set you free so that you can psychologically evaluate yourself. If you follow your rules consistently, the bad jar should never, ever, ever get a quarter in it. If the bad jar is filling up and your system is still making money, we've got this problem, right? If you're following your system, you're still not making, we have a systems problem. You don't need Scotlanders to come behind you and figure this out. You can self-diagnose. I want to set you free so you can build your own trading empire, your own set of fishing fleets, and make all the money you want to make. But if you're not going to have an honest conversation with yourself, we're going to have a real problem because either it's an ego problem, a fear problem, and we've got to address it so you can make the money you will make and help other people. Okay. Now, like I said, that's the end of the PowerPoints. We're going to go to counter ranges and HCC, LCC now. So you have something tangible to walk away from tonight. The counter ranges is one of the longest running things I've ever taught, besides the Market Watch 4. I introduced the market about 2004 publicly, if I remember correctly. And the reason I share this with you is because you're in the counter range for January right now, and the next one's not till July. So why would you care about this concept? Like, what's the value in this crap, Scott? Show me. Because the professionals, the institutions, literally institutions, are going to set these ranges. And it takes them, listen, this is something you want to write down, okay? The first 10 trading days, not the first 10 calendar days, the first 10 trading days of January and July. That's why it's called J and J. What you'll notice when you start to look at this, and it doesn't matter if it's the S&P 500, it doesn't matter what market you trade in globally. This is euro yen. You will see how they're going to sensitize to this on a measured move. But it takes the first 10 days of every January and every July. So think of July like halftime of the Super Bowl. They come back, you're all having a great time. Next thing you know, they're building the ranges. You come back, it's like, what is the market going? Why did I not know this? So when they're done with this, then there's a confirmation period after that. What this gives you is you'll take the first 10 days, the extreme low of January and the high of the first 10 days. So where the lowest low and the highest high is in the first 10 trading days, which will end on the 16th, right? So look at my screen really quick here. So that means on Thursday, because of the holiday and then respectful of memory of President Jimmy Carter, that puts us wrapping up on the 16th. So you can take the first trading day of the year and the 16th, and I want you to put a box around it and we drag it forward for the next, through the end of the year. Just drag it across. Once you have that, you can copy and paste that box and come down, and that will give you these sensitized spots on the screen. Then you can take your fib tool, if you know what that is. You go into here, take your price retracement lines, extension Scott, thank you. And you can do this and you will see the 50, 38, 2, 61, 8. Everybody I work with professionally, when we get a couple weeks before the start of January or July, they start to salivate because they know these moves are coming. This is NVIDIA. This is probably one of the most A plus 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 trades I've ever set up for anybody in my career, meaning students. And I did it for TSU about 6 weeks before everybody else is putting out in the industry. Why? Because I could see a high plateau, which is last year, last July, as you see. Great consolidation. You'll go in the beginning of the January range. They're going to jam the thing for the first 10 days. It's that simple. This allows you to see measured moves. You will see the sensitization of this as she goes higher. This is something I've literally put in front of people for the longest time. You'll even see the most recent behaviors through here as you look at NVIDIA. Apple's another one that comes to mind just recently. The longer you stay consolidated inside that range, ladies and gentlemen, the more important it becomes. Because the longer they're contained in here, just like NVIDIA back over here, the longer they stay contained within the range and cannot break out and fall through, the more energy that is being stored for the future. That energy then releases like a cold slinky. When it does, it explodes out. And then this is where you get the energy that then propels it so that you can profit. SMCI is another one that you guys have probably paid attention to. The same thing happened here before this. I will add this really quickly. One of the smartest things you can do as a trader is to never ignore a base. I don't understand why this has got lost in translation over decades, but it really has. The consolidation, if you go back and look at the Dow's Industrial for about 20 years from the 1960s to the late 70s before when Carter was leaving and President Reagan was taking over at that point, that led to this monster bull market was all from a 20, 25-year base. You don't have to wait for those. You could do this as a day trader, but you've got to concentrate the energy so it breaks out. I cannot teach you everything in 17 minutes tonight about this concept. There's just no way. This is normally 2 hours. What I can tell you is every January and July, mark the first 10 days. I can tell you on the 16th, we're about to wrap up. And also show you that we just went through this. We followed this pretty actively in the class that's wrapped up. And this is exactly what we looked at with NVIDIA as she is now trying to trade back left over this compression, coil, expansion, and you pretty much almost have a measured movement right here. That's opportunity if you can learn to read the charts. Now, that can take time. It's a develop a skill set. If you want to do that, it's up to what you want to generate from the markets for you. This brings up one more point. When you're going to do what I call HCC LCCs, and when I do tomorrow's class, I can go deeper into this because we are up against the time clock tonight. So when I say HCC, LCC, here's what people think. Oh, higher close candle. And you think of individual candles. Professionals are going to look at the current candle relative to prior candle. They need a benchmark. You need to frame and filter. You want consistency and discipline as a trader. This is one of the tools to help you get there. This is to help set mental speed bumps. So when I see Apple's breaking out into the year type rally, and I've been consolidating for basically 5 months here, what does an HCC LCC look like? And we also have the scripted encode within TSU. When you think about this, I want you to take the current bar, like this big one right here. Where did it close relative to the extreme high or low of the bar? If it closed greater than the prior bar, don't care how this color closed here. That is irrelevant. Did the close greater than the prior high or its prior low? I've been teaching this since 2003 publicly. If you follow that and you're breaking out, when is the first lower close candle on the screen? Look at these. Closes greater, closes greater, closes greater, closes inside, that's neutral, closes inside the high and low, that's neutral, closes greater, that's a higher close, higher close. This one right here is going to close between here, that's neutral. It's got it closed red, doesn't matter. Didn't close greater than, neutral. Didn't close greater than, the highest of that, neutral. Higher close, lower close. Let's put some dollars around this for 1 second for you to understand this. Without you doing anything crazy, you just finding a trending stock. At what point from this breakout point at 237 did she close lower for the first time? It's none of these. When did she close lower than that? It's 247, 248 and change. You go back to NVIDIA and do the exact same thing. And remember, NVIDIA's been split now. Okay, let's go back a few, last year. This is the same spot. Now, remember, she's been split 10 for 1. When is the first time she actually has a lower close candle? It is right here, ladies and gentlemen. Closed green, but it closed lower than. To give you perspective of a breakout zone back through here, back in the 5, which basically was like 5, what we say, 586 or whatever its point, 50, 506 at that point. When's your first lower close? Not till 610, 6, whatever, 661.55 from 50. And that's been split 10 for 1. There's nothing to interpret here. Josh uses the morning glory strategy. I've taught this for 2 decades. It's a mental speed bump. Okay, that's what this is. It's a mental speed bump. This comes back to the question, are you trading to be right or trading profitable? Please get in the habit of focusing on following a systematic situation where you have a frame that fits your personality. It doesn't matter about Scott Landers here. It doesn't matter about Josh. I love him or anybody else at TSU. Trading is about figuring out what you will consistently do. So when they put your head in the bench vise and they turn the handle, no matter how much pressure comes to you, you'll execute. That way, when you see opportunities lining up for you on your charts, right, and you see potential opportunities and you're riding this long, you don't choke and come out of it, right? That's important. There's a reason the ES is running up here, by the way. There's a liquidity hunt happening. The question is, can you see that? Your focus needs to be on what works for you and no one else. If you don't have the right frame, you don't have the right filter that works for you, you're going to struggle. And you'll go for the clickbait like Josh talks about. The great thing about TSU is they offer these solutions. With that, hand it back to my brother. Get questions. I'll see you guys tomorrow afternoon, and we can talk about these things then, okay? Back to you, Josh.
So sorry, I had trouble hitting my mute button. Funny fact about me and Zoom mutes, I was on a team call. Luckily, it wasn't in front of like 200 people. And I had caught whooping cough. And so I thought I muted myself, and I proceeded to like cough my brains out. And I didn't mute myself. And so finally, one of the TSU team members was like, bro, like seriously, it was bad. That was Andrew. That was for you, Andrew. All right. Thank you, Scott. Are you guys seeing the diversity among instructors? I want to encourage you, just like I encouraged people yesterday with Rebecca, like if you're a pro, a trading stud or gal, I still haven't figured out what the female version of that is, you know, we've got more advanced people than Rebecca's apprenticeship. But if you just kind of got your mind blown by Scott, then we have stuff that's more beginner for you. But the people that are needing to take that next right step, Scott's exactly the right person to do that. And I'm so glad that he's part of the team. That higher candle close, lower candle close strategy that he shared with you guys, or it's not a strategy, it's a tool, that increased my wins. So go back to our benchmarks, and we're trying to make at least 1.5 R on our wins, or 3%. That added an extra percent to my wins on the Morning Glory strategy, which is intergalactically beneficial. You don't find those kinds of huge steps forward. And actually, he taught it in a preview webinar much like this. And as Scott does, he doesn't ever teach what he tells me he's going to teach. And he's like, I got a surprise for Josh. And so that's when I pull up my pencil, because I'm like, this is fixing to get good. And he went on to teach higher candle close, lower candle close. I literally messaged him after class, and I was like, bro, where did that come from? And so we proceeded to program that. Like he said, it's an actual custom indicator that we can give you when you're part of the Tradesmart community. And I immediately applied it and have had great results with it. So, you know, don't underestimate the value of something that you didn't have to pay for. It doesn't mean that it was worthless. It just means that Scott was generous with what he offered. With that said, I'm going to do a hard transition. This is kind of a long intro to my friend Valerie. Again, for those who just came in, we had like 50 people join in the last 20 minutes. I don't understand. But I'm glad you're here. I'm really glad you're here. It's Valerie's birthday, so we're all going to sing. We're all going to turn our microphones on and sing. No, I'm just kidding. But give Valerie some birthday wishes. And while you do that, allow me, if you would, to share with you the documentary, The Uncanny Story of Pete and Janet. This is a true story. I will always tell you if a story is a metaphor or if it's true. And if I don't say otherwise, it's true. And this is a real life true story that I experienced in 2013. We were having a live event in Orlando, Florida. We actually teamed with Tony Robbins, the Robbins Research Crew, and we took about 200 traders to a Tony Robbins event, and it was amazing. Some of you guys may have actually been there. Kurt Mickle was here yesterday. I don't know if he's back today. I met Kurt in person at that event. We became lifelong best friends, him and his precious wife, Patricia, and my wife, Jen. We just are good buddies. They live a few hours away from us, and we see each other at least once a year. And so at this event, like, I kind of felt like a rock star, if I'm being the opposite of humble, arrogant. People would come up to me and they're like, "Oh, Josh, so nice to meet you." And, you know, like, because we only hear you or see you on the webinar. And this guy, Pete, came up to me and he was like, "Josh, I'm so glad to see you. You helped me make $1 million last year." And I thought, huh, that's very good. I had not made $1 million trading in a single year. Pete beat me. And I said, "How did you do that?" He said, "Well, I had a $30,000 trading account and I had this little strategy and I just did it over and over and over again." And he let his earnings compound. He literally made $1 million in a year. And I was feeling very good about myself. I thought, I made that guy a millionaire. Well, my arrogance was quickly deflated, as it should be, because the very next person that came up to me was Janet. And let me tell you, Janet did not have Pete's same experience. Janet came up and she said, "Josh, I'm so glad to meet you." And I'm like, "I know. Tell me how much money you've made. This is going to be good." And Janet was like, "No, it's not that at all. I've lost almost $250,000 and I'm really struggling. Can you help?" I'll be candid. My first thought was, can I introduce you to my friend Pete? Because Pete just made $1 million. Do what Pete did. But I didn't do that. And we talked a little bit and I kind of learned some things that she was doing and I had some thoughts and I will tell you the end of Janet's story is a positive one. She figured it out and she ended up putting cash in her jeans. She never made $1 million in a year, but I've not met a lot of people that have made $1 million in 1 year trading. Pete was an anomaly in that regard. But that situation bothered me. One, how quickly my arrogance increased bothered me. But number two, I thought, how do these people have such dramatically different experiences? So on the flight home, I just rationalized it. I was like, well, they must have been in different classes or different market environments. And so I wanted to do this research project and find out what the differences were. And the team came back to me a few weeks later and they said, "Okay, we've got the information here." And they started laying it out. And I said, hold on. Pete and Janet look like they were in the same class. And they said, "Yeah, they're both in Foundations of Trading." And I said, No. I mean, it looks like they were in the same class, the same webinar. They heard the same exact words in the same order with the same goofy stories, the same market conditions. Everything was the same. How did Pete make $1 million and Janet lost $250,000? Riddle me that. I ask you the same question. How do two traders in the same training, in the same market conditions, have such different trading results? The answer to that question is going to be brought to you by my dear friend, Valerie Fox. Again, birthday Valerie. Valerie is a master strategist. So I had worked with Valerie for a couple years. She was amazing. I love the femininity that she brings to trading and Tradesmart. There's so many super smart gal traders out there. In fact, I think the gals are maybe a little better than the guys, if I'm candid. And then Valerie went off and had babies. And so she disappeared on me for a couple years. And we reconnected a while ago. And we were talking about the apprenticeship that she could have. And she said, "Well, I've got some strategies that I could share." I was like, "Well, how many do you have?" And she said, "I've developed 40 over the last couple years." And I said, "Hold on. I think my Zoom connection glitched. Did you say 14? And she said, "No, I said 40 custom trading strategies." She's like, I do one almost once a week. She has her own community of people that she shares her trading strategies with. And I said, "That's amazing." But she said, "But it's not really 40. It's like 40 times 3. because everybody has these unique DNAs, and I've categorized them into a few different categories. And so there's customizations and adjustments that need to be made to each strategy depending on what your personal DNA is. And I thought, this is so good. Because what Valerie has done is answered that question. I'm giving a little bit of it away, Trader DNA, winky, winky. She's answered that question of why two different traders can see the same exact chart but have different results, because they're not trading a strategy that's congruent with their DNA. Valerie's going to teach that to us. She's also passionate about helping traders free up their free time for living their best life. Valerie's over in Portugal because she's adventurous, more adventurous than me. She scooped up her whole family, went over to Portugal because it sounded fun. And I said, that sounds terrifying, but good on you. So Valerie is one of the original lifestyle traders, her and Chris Burgess, traveling around the world. She's also the mentor in the Empowered Apprenticeship. So as you're kind of figuring out what's going on here, we're giving you the table of contents in this book, right? We're dumping a lot of ideas on you at once, and I'm helping you understand which mentors specialize in which areas. And so if you're thinking to yourself, I'd like to learn a handful of strategies that would match my personal edge that I have in the market, my personal superpower, and create an edge in the market, then Valerie is your gal. That's who you should go and do an apprenticeship with. So with that said, and this needs to be the most emojis, because ladies and gentlemen, it's her birthday. And not only is it her birthday, it's midnight her time over in Portugal. So it's actually almost not her birthday anymore. Would you give the warmest welcome to my dear friend and trading buddy, Valerie Fox, ladies and gentlemen?
Oh, hello, hello, hello. I feel the birthday love, and I can't believe I'm still up at midnight doing a presentation.
Thank you, Valerie.
But here I am. Here I am. This is, as Josh says, what I get for moving. Anyways, thank you guys all so much for being here. Let me get my screen shared and we will dive right in. I have some fun content, hopefully some interesting context to get you guys thinking even more. Gosh, Scott gave so much good insight to think about and a lot of amazing analysis as well. I kind of want to take his apprenticeship just to learn that level of detail of analysis. It's quite amazing. All right, but we're going to start by talking about your trader DNA. And some of you might be like, I don't even know what you're talking about. What is trader DNA? But let me just kind of set the stage here. And I'm going to dive right in and I'm going to go kind of fast because, you know, Josh only gave me 15 minutes and it's very difficult, as Scott was saying earlier. But what do you guys see here? I'm going to use the chat. We're going to use emojis. But what do you see on the screen? Tell me what you see. And then I'm going to, you know, apply it to trading. The shoe doesn't fit, Michael. Thank you so much. Yep, everyone. Oh, it's flying in now. You guys must have been typing. Shoe's a bad fit. Cinderella stepsisters. Exactly. This may or may not be a screenshot from the movie Cinderella, but what you see here is someone trying to squeeze their foot into a shoe that very clearly does not fit. And this happens a lot in trading. Can anyone relate to that? Give me an emoji if you have personally experienced trading a strategy that you know is not a good fit for you. Anyone feel that? Because in my experience working with traders, that happens a lot. And that happened to me a lot also when I first started trading. I spent about 3 years. I've been trading for over, gosh, I just went 14 years now. But the first 3 years, I really struggled. I tried doing, you know, all kinds of things to make it work. And that included trying a lot of strategies that were actually quite out of alignment with my trading personality, my schedule, and a whole host of other things. And I think a lot of traders don't realize they have a lot of control over choosing a strategy or crafting a strategy or aligning a strategy in a way that it fits their trading personality, or what I call their trading DNA. So that's exactly what we're going to dive into today. So first of all, what is trading DNA? What do I precisely mean by that? I mean, it's your unique trading preferences and style. It's influenced by your risk tolerance, your time commitment, and your emotional control. And it determines ultimately how you approach the markets and how you make trading decisions. So everyone's different. Everyone's a little snowflake. Everyone has their own little fingerprint with how they trade. And I want you to get to know your own trading DNA a little bit further today. So here's a couple elements of trading DNA that I want you to think about. The first one is risk tolerance. In this one, what you're really asking is how much risk are you comfortable with? And I want to just kind of gauge, we're going to do a little surveys here in the chats. If you were to just say low, medium, high, recognizing that low, medium, and high obviously can mean different things to different people, type in the chat box for those of you that are live what you would consider to be your risk tolerance, low, medium, or high. All right, I see a high, medium, low, medium, low, medium, 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 low, medium, high. So there's a whole host of responses here, and everyone probably has their own definitions for those. But even on this first one, you can see everyone's a little bit different. And that's how it is, and that's how it should be. But the key is you need to tune into that and embrace that and incorporate it into your trading. Let's go to the next one. Time commitment. This is a really interesting one that I don't think enough people spend enough time thinking about. What is your ideal trading schedule? Again, I want you to type it in the chat box, your response. Do you prefer like 30 minutes a day, just a quick in and out? Do you prefer 1 to 4 hours a day? Maybe you're someone who just loves sitting at the charts. You want to sit there all day. Or maybe you're on the other end of the spectrum and you think, you know what, I don't have a lot of time. I'm working full time. I have family or other commitments, and I just prefer to come once a week or maybe even once a month. I'm looking at all the chat, see 1 to 4 hours quite a few times, some all days, 1.5 hours, 1 to 4, all day, a couple 30 minutes. So for me, I'm really in and out. I used to love to sit at my charts, and now I kind of really appreciate the time freedom. And I like closer to like 30 minutes, an hour, maybe 2 hours max. But certainly not every day at 2 hours. So I think knowing your ideal trading schedule really opens up the window to what kind of trading style and the time frame of charts and what kind of trading strategy you should be trading to begin with. If you say, hey, I really only want to be at my charts for an hour or maybe 2 a day, then you shouldn't be looking at strategies that require a lot of manual trade management or extended hours looking for trade setups, things like that. So you can really kind of take this time commitment component and really narrow in on strategies that are even a good fit for the amount of time they take to trade. And we'll talk more about that in a minute. The next one is emotional control. And this goes into some of the psychology around trading, but you can also use it to select the right trading strategy for you. So next question, how do you typically react when a trade moves against you? Are you impulsive? Are you anxious? Are you calm? Or are you unaffected? Tell us what you are or where you're at today in the chat box. There's no right or wrong answer. It's you are at a point in your journey, by the way. So this is just about looking in the mirror and being honest about your emotional control. Let's see what's coming in. We've got impulsive, more calm now than before. Yes, and that's a natural part of the progression in your trader journey. Anxious, calm, and unaffected. Calm, calm, calm. Anxious, calm, angry, Josh says. Calm, anxious. So as you can see, there's a wide range, and some of this goes back to your personality and how you manage risk and fears and other types of emotional control. And some of it is just your trait, your personality in general. Maybe you're a little bit more on edge by nature, or maybe you're a little bit more calm, or maybe you've completely detached yourself from the result of your trades, like Scott says, which is ultimately what traders should be working towards, because you should be focused on the process and not the outcome of the trade. So, but knowing your emotional control and how you naturally react in your current state of your trading journey allows you to kind of design a strategy that can support where you're at emotionally. For example, if you find yourself being very impulsive and anxious, you shouldn't have a lot of manual intervention in your trading strategy because guess what? You're probably not going to follow your rules. On the other hand, if you're a little bit more seasoned trader and you're less, you're more detached from the result, more focused on the process, you've proven yourself that you can follow your rules and you have a lot more context in analyzing the market in real time and managing your trades in real time, then maybe you can go with a strategy that has a little more room for interpretation and real-time modifications. So you can use this information to your benefit as you ultimately design or choose a strategy that works best for you. Yeah, Josh says it's so true. I trade better if I set it and walk away. That's the case for a lot of people, but a lot of people don't have the they like to sit and watch their trades, and then they get all like worked up about it, right? And then they start making decisions out of alignment with their trading strategy or their trade plan, and that's where trading discipline comes in. The next one is the preferred market. So we have a lot of traders on the call, probably who trade all different markets, but your market also can kind of tell you, like if you're trying to force your way into one market that's not a good fit because of the operating hours or other things, then you really just need to be true to yourself. So type it in the chat box. Let's see what kind of representation we got on here. What is your preferred market to trade? We've got options, stocks and options, stocks and crypto, stocks and ETFs, options. There's nuances with each of these too, right? So some of them are more complex, some of them are more simple. I started personally as a Forex trader years ago. I've added stocks to my repertoire and knowledge base and skills. So yeah, there's a lot of options here, and there's also room to grow and develop into other markets as you become a more seasoned trader as well. And yeah, the funded trader option is not always available in all of the options either. So good to know what your preference is, why it's your preference, right? Is it because of the hours of operation that correlate with your availability? Is it because of the leverage that's afforded in certain markets? You know, really kind of understand why that's your preference, or is it just because that's what you think everyone trades, or that's what you think you should trade? You know, maybe you need to question that if it's not working for you. So let's talk about now matching your DNA to your trading style. So I'm going to go through 4 different categories that I've created about how you can take the answers to the questions that we just asked and figure out which trading style you are best suited for. So keep an open mind here, and then I'll give you a little survey at the end. The first one is scalping. Scalping is quick and intense, and trades can last seconds to minutes. So you're just in and out of the market very quickly. The ideal DNA is someone with probably a little bit higher risk tolerance, quick decision-making skills, strong emotional control, and maybe an hour or 2 of like focused trading. The second one is day trading, and this is more like active and daily. Trades last minutes to hours. You're definitely out of the market before the market closes at the end of the day. And the ideal DNA here is maybe more of a medium to high risk tolerance, maybe a little bit more full-time involvement depending upon your trade management for active trades. You need to be able to remain calm during some market swings, some intraday swings that happen, and you probably need to do some kind of monitoring during market hours if your trade plan is not set up to be a 100% set and forget. The third category is swing trading, and swing trading is really more steady and patient. Trades last here days to weeks, so you're really in trades for a much longer period of time. Your ideal DNA is medium risk tolerance. You need to have patience for some longer setups, so if you're naturally more inclined to be in and out quickly, swing trading is not going to be a good option for you. You need to have a lot of emotional resilience for, you know, days or weeks that could go against you before going back in your direction. But the beauty of swing trading is you don't need a lot of time day to day to manage those trades. You know, there might be an analysis point a certain day of the week or over the weekend where you're looking for new trade setups, but managing the trades day to day is going to be a very small amount of time, which does work well for like busy professionals or people with very active families, multiple jobs, etc. And then the last one is position trading, and this is really that longer term focus. Trades last months to years, more of investing, you know, buy and hold. And the ideal DNA here is low risk tolerance, super strong patience. If you're in trades that last months to years from a day trading perspective, very unaffected by short-term volatility. And in this case, you know, maybe you only check on your trades weekly or monthly. So super, super hands-off and allows you a lot of flexibility from a time standpoint. So let me ask you, which one aligns with you most? Type it in the chat box. Are you a scalper, day trading, swing trading, position trading? Let's see who we have in the room represented. So we've got a lot of swing traders, day trading and swing trading. Thanks, Chris. See ya. Swing trading, swing, a lot of swing traders. Okay, here are some day traders, day trading and swing positions. Done all four, exactly. And that's something kind of interesting. A lot of traders spend some time in each of these buckets or in several of these buckets, and only after experiencing them do they know which one aligns best. Also, what happens for some traders is they think they're a swing trader, but really when they get down to their trading DNA, they're more of a day trader or a scalper. And then when we think about that and the problems they were having as a swing trader, it really all boils down to just being the wrong trading strategy. And then so they weren't able to stay disciplined and they weren't able to get those consistent results. So give me a thumbs up for anyone who has picked the right trading style for themselves from the start. Has anyone picked the right trading strategy from the day one that you started trading? I don't see any thumbs up. All right, let's do the opposite now just to see if you guys are even awake. Has anyone tested or traded in multiple trading styles because you knew the one you didn't try first was correct? There we go. There's all the thumbs up. So yeah, it's very natural to have to spend some time exploring this, but the key is to really hone into your trading DNA so that you can pick the right trading style. And we're not even talking strategy yet. We're not talking how you're finding your edge, where you're entering, where you're exiting, your reward to risk ratio. We haven't even started talking about any of this. This is like the foundational, picking the right time frame that aligns with your trading personality and your DNA. So super core, something not to be skipped over. Also, here are some pitfalls. So some of you might be like, I don't know if I'm in the right one or the wrong one. I want to show you what it looks like if you're not aligned. So these are signs that your trading style or strategy are misaligned with your trading DNA. 1, over trading or under trading due to emotional impulses. 2, taking on excessive risk or being overly conservative. So sometimes people are like, oh, I lost the last trade. I'm going to put a bunch more on this one because I know it's going to turn around. Or the opposite, like, ooh, I just lost a couple of trades and now I'm going to really pull back, which can be part of your trading strategy holistically. But maybe if you're just like entirely afraid to pull the trigger, that can be a problem as well. Inconsistent trading practices leading to unpredictable results. So if you're not getting consistent results, it likely means you don't have the trading discipline figured out yet. Number 4, forcing yourself to adhere to a strategy that's not sustainable for you. So maybe it's not aligned with your schedule. Maybe it's not at the ideal time of day, but you have to be there anyways. There's a whole host of reasons. Feeling overwhelmed or anxious about placing trades. Sometimes, there's a lot of fear underneath the surface, and that can be because you haven't gotten the confidence or the experience, but it can also be because you're not properly aligned with your trading style and DNA. Neglecting proper analysis in favor of impulsive decisions. I know that impulsive decisions can be a big one for people. They have a trade plan, but then they don't follow it, or the trade starts to go against them and they just say, hey, I'm going to do this instead. There's a lot of times that can happen. Struggling to maintain discipline during high pressure situations and experiencing frustration or burnout from your trading routine. So let me know with a thumbs up emoji if you are experiencing any of these right now in your trading. You don't have to tell me which one, but if you are experiencing any of these in your trading right now, I see lots of thumbs up. That might be a sign that you are not aligned with the right trading style or even the right trading strategy. So keep this in mind. This is a good starting point. Everybody wants to get to the fun stuff, the strategies, the analysis, but if you miss this foundational element of trading, then you have the potential to really struggle as you continue in your trading journey. And I know I'm tight on time. I just want to talk about one more thing because I think it's super important when we think about kind of the journey of a trader and the frustration. I want to talk about what I think is the easy, simple steps for becoming an empowered trader, which all goes back to making money, getting consistency, etc. And obviously a little bit tied to the apprenticeship. So to me, an empowered trader is someone who knows how to bridge the gap from where they are now to where they want to be. Most of you are on this call because you're not quite where you want to be with trading. Does anyone relate to that? Give me an emoji. Are you not where you want to be with your trading? Now, the key is knowing how to bridge that gap, right? And all of us, mentors and people that have figured it out can help you. But this is a powerful step to be able to know how to bridge the gap. So I have a really easy process to hopefully simplify this journey for you. And I call it the 4 stages of an empowered trader. The first step is crafting a trade plan aligned with your unique trading DNA, making sure this strategy you're trading aligns with your DNA, aligns with your availability, aligns with your natural tendencies and preferences. Maybe you craft this yourself through your experience. Maybe you learn from someone else and make tweaks to it. Whatever that is, crafting one that's aligned with your unique DNA is step 1, and you have to start there. And if you haven't done that and you're further in this journey, oftentimes you have to circle back to it. 2, implement with precision and discipline. So a lot of people overlook the amount of discipline and accountability and personal responsibility to getting good results. And implementation is a step that often takes longer than people expect. So it's not enough to have a strategy. You have to be able to implement it and follow your rules. Number 3, optimize for maximum profitability. I'm going to kind of speed up here because I know I'm tight on time. And you guys have been here hanging with me for a long time, and the whole team here. Optimize for maximum profitability. So if I say, hey, you can take 10 trades the way you're trading them today, or you can take those same 10 trades and make more money, everyone would be like, yeah, I want to make more money with the trades I'm taking. So that's what step 3 is all about. And it's often a skipped step. People get a strategy, they're doing well, and they don't take the time to optimize it to improve the profitability. And that's all data-driven process. And I talk about it in the apprenticeship that I offer. Number 4 is to scale for accelerated growth. So from here, once you have a strategy, you're implementing it well, you've optimized it, you've improved the profitability even more, then it's all about scaling. And there's a number of levers you can do to scale your growth. Adding more money to your account, increasing risk, increasing the instruments you traded on, increasing how often you trade, etc. So the only thing standing between you and outrageous success is continuous progress. So I just want to give you guys some good love here that this process of trading can be simplified. Sometimes it can seem really overwhelming, but you just have to make progress. And with these 4 simple steps, you can continue to make progress on your journey, whether it's with me or Josh or on your own or Scott or Rebecca or Caden. There's so many wonderful ways to do this, but this is a very simplified way of keeping yourself on track for the steps that are going to make a really big difference in your future. Couple ideas. I'm going to go fast through these. You guys have the recording. You can take pictures, but how to bridge the gap via focused actions. Because sitting here and me telling you to do this is one thing, but I want to give you guys some specifics. So if you don't have an aligned trade plan yet, review your trading DNA, explore that some more, define your ideal trading style, pick your market and your trading time, go to your charts and figure out a trading edge you see with ease, determine those logical entry and exit criteria, or obviously get more experience and or a mentor to help you along the way to shorten that learning curve, right? Those are some things if you don't have a trade plan today. If you're struggling to get consistent results, that's really a trading discipline thing. So start trading your aligned trade plan on a paper or practice account. Get practice, measure yourself daily if you're following your rules, etc. I really love the jar analogy that Scott gave. So create a trade journal, use the journal every single day to track the trades you're taking, the outcomes, what went well, what can be improved, and any market observations you make, because those market observations are going to help you when you get to the optimization stage. And then 4, review your trade journal weekly. Learn from your mistakes, track your progress, track your operational excellence, because operational excellence is what's going to give you consistent results. Here's an example of a trade journal. Obviously, you can, do this on paper. You can do this in Word, but, just tracking each trade. What was the outcome? What went well? What can be improved? And what market observations you have, and then tracking some overall stats. If you want to improve your trading profits, you can obviously got to start with steps 1 and 2, right? An aligned trade plan, consistent execution. Then start brainstorming, start making those market observations about what kind of modifications might you be able to make to your entry, your stop, your target, your trade management that could potentially improve your profits? We're not trying to prophesize here. We're just trying to brainstorm. And from there, you continue trading your original trade plan, but you track the results of two other forms of trade management in your trade journal. And then you let the data decide. Let the data tell you. Compare the performance between a couple different variations of your strategy and decide how you want to proceed. Obviously, a month isn't always long enough to test. You might need to track for a couple of months, but sometimes you get some ones that are like, nope, definitely not going to be better. And you have other ideas that come to mind once you start this testing process. And then lastly, you're ready to scale for faster growth. Obviously, make sure you have steps 1, 2, 3 down pat. Explore your paths for scaling. Are you going to grow your account? Are you going to do a prop firm? Are you going to increase your risk tolerance per trade, per day, per week? Are you going to add more markets, add more time frames? There's a bunch of different things, an entirely new strategy. And then figure out what works best for you. What's going to work for you, your schedule, your preferences, and then start your first scaling path. Do one thing at a time. Make sure you're holding yourself accountable. You're not losing quality in your trading, and obviously also build a network. So those are some steps. A plan without action is not a plan, it's a speech. And I really want to make sure you guys walk out of here feeling like you have an action plan. So I just want to remind you, take a moment, create your 30-day action plan. What's your current state of your trading? Where do you want to be in the next 30 days? What's one thing you can do to get there? So think about this. Type it in the chat box if something comes to mind for you. There should be one thing you can pull from this small, I don't know how long I've been going presentation, that you can do in the next 30 days to get yourself progressing down the path of an empowered trader. In tomorrow's VIP session, I'm going to be sharing one of my favorite strategies, and I'm going to share it on all 4 trading styles. So inside my apprenticeship, I release 5 strategies in total in the apprenticeship, and each one comes in all 4 of the trading styles. So you're going to get a scalping trade plan, you're going to get a day trading, swing trading, position trading. Technical analysis is really cool because it applies to all the charts. Yes, of course, there are different tweaks you can do, but I'll show you tomorrow in the VIP session exactly how that works. And hopefully you get to come out of this session with a mini action plan and feeling super empowered to take your trading to the next level. Thank you guys so much. Again, I appreciate you guys being here, and your time is precious, and I appreciate all the birthday love as well from earlier. All right, Josh, back to you. Maybe.
Josh, you're muted.
Oh, crud. I am muted. Thank you. Oh, my gosh. I have muting issues. Why do I struggle? Valerie, are you still there?
Yes, I'm here.
Hey, it's so funny because you were responding to me in ways that it seemed appropriate to respond, but you were actually just saying, maybe he's there, maybe he's not. I was telling them that it was a big birthday. I just discovered on my phone, the Facebook thing went off, and it's like one of them that's divisible by 10. So not only are you here on your birthday, but it's like a big birthday, a decade birthday.
Yes.
Do you have Amazon in Portugal? Like, do they do Prime there? Does that work?
They do, Amazon Spain delivers in Portugal. So yes, I'm not completely detached from Amazon.
So I can send you a gift later to thank you for showing up, and it'll be something you can use.
Yes, absolutely.
All right. Keep an eye. Is it the email address that I have for you?
Yes.
All right.
Thanks.
I so appreciate you being here on your birthday. Thank you very much.
Yeah, thank you.
Can you guys give Valerie some love? Y'all good? You got about 6 minutes in you for me to go over the trader funding program here. I mean, I don't want to say that I had a stopwatch out, but Valerie went like 30 minutes. So what's hilarious to me, Valerie, is it's the same slide deck that you would normally take an hour to teach. I guess you were hoping to talk fast. I love that. all of our instructors want to over deliver, and I appreciate that about them. So we're good. I'll just take about 5 minutes here and go through this quickly. That's an interesting slide. So, excuse me. Usually when I tell people that we can give them a $20,000 trading account, this is the reaction that I expect from them. Like, you're telling me that you can give me a $20,000 trading account today? Like, that makes no sense, Josh. How does this work? Let me help it make sense for you in a way that you will be excited. So let's imagine, if you will, that I have a rich uncle. And my rich uncle could trade the entire stock market himself with his $50 million, $100 million trading account, and he would get a certain result. Or my rich uncle, because he's smart and savvy, would say, I'm humble enough to know that there may be some better traders out there than me. And so I'm going to parse out this humongous trading account into $20,000 slivers and ham them out. And some of them are going to not win. Some of them are going to be average, and some of them are going to be spectacular. And I think that I could generally do better than if I were to just invest all this cash in the stock market myself. And that's what's going on. There's a humongous pool of cash, and then there is infrastructure that when you place a trade, it goes through their system. And if you are not yet past your audition, which I'm going to talk about, then it just stops there. It never makes it to the stock market. But then once you pass your audition, it flows right on through and goes to the stock market. It all happens nearly instantaneously. If you're savvy, you may ask the question, well, what about slippage? And I've asked my rich uncle that question. He's not actually my uncle, by the way. And they said it's nominal, because sometimes it's in their favor, sometimes it's in your favor, and it all works out. And you're talking about a fraction of a cent on average. So here's how it works. We can give you a $20,000 trading account, but my rich uncle is going to ask that you follow a couple rules. Rule number one is don't lose more than $300 in a day. Can we all agree that if you lose $300 in a day on a $20,000 trading account, for the love of everything important in your life, reach out to us, reach out to your mentor, say, hey, Valerie, I just lost $300 today. Happy birthday. And Valerie's going to say, what happened? Let's talk about that. Now, $300 a day, if you do that, what the account will do is simply liquidate your trades, put you in the adult penalty box until the next trading day, and then it turns back on and everything as it should be in the world. The second rule they're going to ask you to follow is don't lose $900 total. So if you effectively grow a $20,000 trading account to $19,100, they're going to take your trading account away. They're going to be a, what do they call that? Reciprocating giver or non-reciprocating giver. They're going to take it back. So don't lose $300 in a day. Don't lose $900 total. You also need to pass an audition. Now, this is extraordinary. To pass the audition, all you need to do is generate $1,350 profit. For those of you that aren't calculators, that's 6.7%. Remember, I said we're targeting on a $20,000 trading account, we're targeting making $400 a trade. That's 3.5 trades, profitable trades, and you've passed your audition. It's not quite that simple, because my rich uncle wants to make sure you're not a one-hit wonder, so they're going to require that you do 10 trades. So you could do trade. That's 4. You're up to $1,400 or so. And then you could do like little instantaneous day trades. They don't give you a parameter on how long they have to be. You can be in the trade 1 second, in, out, in, out, in, out. Boom, pass my audition. They're going to ask you that you do it in 10 trades, and they're going to ask that you do it in a 45-day trading period. It's such a low bar for success, and I'm so grateful that they've done that. Here would be my recommendation to you, and it depends on what apprenticeship you're in. So if you are in Rebecca's apprenticeship, you may not start your audition until the very end. You've got a lot of groundwork to make up. But if you're in Valerie's apprenticeship or you're in Scott's apprenticeship, I'd learn for about 4 weeks, and then I'd start my audition so that in the 8 weeks that you have remaining, you could have your mentor there to help guide you. You could ask about trades on the Discord server. And we'll talk all about what the apprenticeships look like here tomorrow, but let them hold your hand through that process. The last thing is, my rich uncle's got to make some money as well. And so they're going to ask that you split the earnings 70-30. This is brand new for this year. And I meant to mention this at the beginning of class. Some of you have done funded accounts before, and you may want to get another account, an additional account, even if you've got one going, because this used to be 50-50. The changes they've made is it's now 70-30. By the way, it's 70% you keep 70%, and they've lowered the a requirement to pass the audition. It used to be at 10%. You used to have to make $2,000. Now they've lowered it to $1,350. They want people to get funded. That's how the pool grows. So here's what's in it for everybody. You get to enjoy your trading account. It's in your name. It's all you. The way practically this works is when you get ready for your trading account, you reach out to us. We put a credit in there. So we contact our funding partner. We say, hey, Deborah, because she was such a great sport earlier today, give her a credit for one trading account, and then you just go and redeem that credit. Boom, that's an audition. It's up to you to pass your audition. We're happy to help to the greatest extent that we can. It's your account. Tradesmart just removed all of the cost of funding your account so you can focus on your education. It literally broke my heart for almost 14 years when people would say, man, your training seems so good. It seems like exactly what I need. But if I invest in the training, I'm not going to have money for the trading account. So I'm going to keep clicking on those videos on YouTube, trying to save up my little $3,000 or so to fund my trading account. And then they're frustrated on two levels. One, they're not really making much money on a $3,000 account. And two, they're being led by clickbait on YouTube. And that frustrated the heck out of me. No more. I'll give you the trading account. You can focus on your education. And then lastly, candidly, the capital firm receives an audition fee paid by Tradesmart University. They're not expensive, but they're not cheap, right? They cost us about $100 a pop for your auditions, but Tradesmart is glad to pay that. Also, the funding partner gets up to 30% of your account growth. So let's do some quick math here, and then I'll send you on your way tonight. Fun fact, a $20,000 account grown at 2% a week. That's one winning trade a week, basically. 2% a week becomes $56,000 in a year. An $80,000 account, which we have. I don't encourage you to start there, but we have $80,000 accounts available. $80,000 account grown at 2% a week becomes almost $250,000 in a year. We can actually go up almost to a $500,000 account. Some of you may have the go big or go home mentality, and usually people go big and then they go home. Most people's brains right now are not calibrated to actively trade a $500,000 account. They are calibrated for a $20,000 account. If you lose $400 on a trade, that's not a crisis in your life. That was $400 on a trade, and that's 2%. All right. You lose $50,000 on a trade on a $500,000 account. That's a crisis in your life. Get my point? So I encourage you to start with the $20,000 account. These trader funding options are only available to apprenticeship students. I wish it was different. It just is. It's my commitment to our funding partner. We only send them the people that are committed to being successful. So your ticket to a funded account is through the apprenticeship, which, by the way, we're going to be opening enrollment for apprenticeships tomorrow. You don't want to miss tomorrow's session. We're going to have Alfonso Esposito here. Alfonso, some of you guys were asking about technical versus fundamental analysis. Alfonso has an apprenticeship called Hybrid. As the name suggests, it's a hybrid between technical and fundamental analysis. And tomorrow, Alfonso is going to be sharing with you how to find the best trades, level 1 trades as he calls them, and how to find the worst trades so you don't place those trades. So tomorrow, we just have the one presenter, Alfonso. I'll be sharing a little bit as well. And then at the end of class, I'll be taking, it's about 20, 25 minutes to really lay out everything that's in the apprenticeship. We'll be going through all that. At the end of it, we'll open up enrollment. Tomorrow, there will be a huge discount. Some of you have come to a boot camp and seen the apprenticeship before. Let me just say, it's a huge discount. It's bigger than what you were expecting from seasons past. We're making some changes, and it's enabled us to lower the price a little bit. Also, we've got several that are already enrolled, re-enrolled. Scott's people have been with them for 3 years. They just never leave. So right now we have availability for 100 new people to join an apprenticeship. It's not good, it's not bad, it just is. I'm letting you know on the front end. And I have a humongous surprise tomorrow that will only last for 24 hours. So if you're watching a video, try to be here tomorrow or watch the video ASAP. It is a true no BS 24-hour bonus. And every time people are like, well, it's 24 and a half hours. I'm so sorry. You know, integrity says, do what you say you're going to do. And if I'm telling you it's a 24-hour bonus, on hour 24 in 1 minute, the bonus is going to be gone. And it's incredible, and you're going to be sad if you miss it. So be sure you come tomorrow. With that said, I will take a look and see if there's any questions. 1 a.m. for Valerie. God bless her. She may have taken off. Does the funded account require specific trading program software? Yes, kind of. You have to work through their platform. If you're used to TradingView at all, their online version looks a lot like TradingView. If you are used to, what's another one? If you're used to Schwab and the iPhone app, they also have an iPhone app that is similar to Schwab. So here's how I have 2 ways that I do it. Way number one is I have it on my phone, and then I do all my analysis on a chart, and I just use the phone. It's basically like a glorified calculator. Like they're big buttons, you just hit them, and it's easy. The other way is if you want to do it on your computer, then they've got an interface that looks a lot like TradingView. It's not TradingView, but it looks a lot like it. In fact, I think they may license the software even. I'm not sure. But to answer your question, yes. And they do that because they put the guardrails around you so that you can't lose more than $300 in a day or $900 total. In the beginning, before you pass the audition, it's not a big deal. It's all virtual. But as soon as you pass that audition, you generate the $1,300, you're trading real money, their money. So they put those guardrails around you, which I wish everybody would do. It's just good trading. But people are dumb. They don't actually follow risk management protocols, and so they force you into it. Another question I often get is, because it's 20 grand, does that limit you in what you can do with day trading? And the answer is no, because as far as the stock market is concerned, it sees the big $100 million portfolio. As far as you're concerned, you just have a little $20,000 sliver of that. So you're not subjected to the pattern day trading rules because in actuality, the account's much larger than a $25,000 account. Yes, you do not have to use MT4 at all. Yeah, so Rebecca clarified, TradingView, and you'll learn about this with Kaden and Rebecca, is the platform that we use for charting. So you see when the instructors pull up the charts and they're looking at stuff, I use TradingView. Scott Landers was on TradeStation. I think Alfonso uses, what do you use, Alfonso? I'm blanking on it here for a second. He'll type it in here in a minute. Rebecca uses TradingView. What if you're already in an apprenticeship from last time? Would be 2 traded accounts or start over with a new apprenticeship? So there's a few ways that we could approach that, Jim. Most apprenticeships have ended. So unless you're with Scott's Pro, then your apprenticeship probably ended. If you still have a funded account that you've not used from that, then that's still yours. We don't take that away. We ask that you do it around the apprenticeship just for our accounting purposes. I don't want to have to keep track for 2 years that you're entitled to a funded account. And I'm also not sure that they won't change the price on us. And so the economics would change on our end, how much we're paying for the auditions. So, let's get that used, but we don't take that away from you. Our heart here at TSU is to do the next right thing always. And so as long as it's not ridiculous, we'll do the next right thing. An example of something that's ridiculous is you take 10 weeks of a 12-week apprenticeship and then decide that you want to quit and get a full refund. Well, that's not fair because you got all of the content, the training, the mentorship and everything, and then you decided to exit. You do it for a couple of weeks and you're like, I don't know if this is a good fit, or I didn't have as much time as I thought. 2 weeks in, no big deal. That's an example of doing the next right thing. And we'll talk about what those policies are and everything. But I think policies are good as guiding principles. And I understand being on the other side of policy. The policy is there to keep everybody safe, but we endeavor to do the right thing. And so I'm happy for you to get that trading account. For an account's only for stocks trading or also for FX. We primarily are in stock. We have them for, I think we have a contact for Forex. I know we have one for futures. I can probably get you a contact for Forex if you prefer. Good question. George said, this is my heart too. I wish I would have had one of those accounts years ago. I haven't had the money to trade in the past couple of years. My skills are getting rusty. I feel you, brother. I'm going to share a little bit of my trading journey in class 4. And I mean, who shoulda, coulda, woulda, who knows? They weren't around back then. They actually were not. There was fallout from the 2008 financial crisis. There was a bill called the Frank Dodd bill. And in there were some good things they did, but mostly stupid things they did, as the government does when it steps in and regulates. And so one of the stupid things they did was outlaw what's called prop accounts. Well, there's kind of 2 types of prop accounts. And long story short, they have now released that regulation. I actually called a securities exchange litigation attorney when I started seeing these funded partners. And I said, help me understand this. And she said they've released that regulation. So, you know, it actually was not something we could even do 15 years ago, but is available to us today. And it makes so much sense. So much sense. The best metaphor that I have is the Hertz rental car. Like, you don't have to go buy a car when you go to Colorado. You can just borrow Hertz's car and use it. And then when you're done, give it back, right? And some people are going to have an accident, and that's okay. They have insurance for that. And the funded trading accounts are exactly, I shouldn't say exactly, but they're very similar. Check Q&A, thank you. How advanced is Alfonso's compared to Rebecca's? Okay, that one's an easy one. Rebecca's is beginner, beginner, beginner. Like, you've never traded a stock. You don't even really know what a stock is. You just see other people are making money with this, and you're here for the party. Like, you don't even really know how you got here. Or if you are a little bit intimidated by technology, using the software, the TradingView platform, and all of that, Rebecca is the one to hold your hand and help you launch. It's, in fact, literally, it's an adaptation of a curriculum we used to have called Stock Market Made Simple. It's the most basic training. Alfonso is on the other side. He's intermediate. So to make the most of Alfonso, I would recommend you've placed a trade or two. You know, that's not a requirement, but like, you've gotten into a chart, you've got a broker, you've kind of got some analysis chops. And Alfonso's going to teach you strategy and how to find the very best trades all the time. So somebody was saying, man, I wish I could just find the great trades. That's Alfonso. And he has kind of a hybrid, pun intended, that's the name of his apprenticeship, hybrid system with fundamental analysis and technical analysis. And Valerie's the same way. I think the question disappeared, but I think you asked about Valerie. I would put Valerie and Alfonso in the same experience category, as in they're intermediate. So actually, this is a good point here. Let me do this. I had the team put together a page, and we're going to see how this works. Use it, don't abuse it. So if you would like to schedule a call with a mentor, say, hey, I'd like to find out a little bit more about your apprenticeship, and I'm going to explain them all tomorrow, which is part of why I need 20 minutes, because I've got to kind of go into detail with all these. But you can schedule a call with anybody on here. Their schedules are in here, and some have different availability than others, depending on who has scheduled what calls. I'm going to put this link in the chat pane. Use it, don't abuse it. And, you know, I would encourage you to take the opportunity to talk to them about if their apprenticeship is a good fit for you. Okay, this isn't, it's a 15-minute phone call. It's not your opportunity to pick their brain for the best strategy they have. That's not fair. You wouldn't want somebody to do that with you in your area of expertise. And I've encouraged them not to do that as well. But if you want to talk to them and say, hey, here's where I'm at, and here's some of the struggles I've had, and do you think that your mentorship would be a good fit? they'll talk with you candidly. And if they're not a good fit, so if you're talking to Rebecca and she thinks you're a little bit more advanced, she may steer you towards Alfonso or Valerie or Scott. If you're talking to Scott and you've never traded a stock before, he's going to steer you back here to Caden or Rebecca. They all want to make sure that you've got the best experience. So there's that link. Also, still available is the VIP. I didn't put slides together for this, but I will put the link in here for you. This disappears tomorrow. So if you are still needing to get VIP, do that tomorrow. As soon as we open up the apprenticeship for enrollment, VIP disappears. So with VIP, you get the additional trainings with all the instructors, which are also recorded. You'll get the 2 from earlier today, the recordings. You'll get all the recordings from the event for life, and you'll get all the class notebooks, which that email just went out right before class. With that said, what other questions do you guys have? We're coming up on 2 hours now. So sorry. Tomorrow's schedule is 9 a.m. Eastern for Valerie's VIP and 2:30 Eastern for Scott's VIP. 9:30 or 9 a.m. Valerie, 2:30 p.m. for Scott. George, I'll go over the mentorships tomorrow, but they're not that expensive. In fact, somebody was asking about Scott's standalone training, and his course is actually more expensive than the mentorships are. So we've really priced it so that 1 trade a month will more than pay for your apprenticeship. So that kind of calibrates your thinking right now. Alfonso is tomorrow night at 8 p.m. Eastern, and then his VIP session will be Wednesday morning. I believe Alfonso's at 9. Sorry. 7 p.m. Eastern. 7 p.m. Eastern. I have so many time zone gymnastics happening in my head right now. Thank you, Rebecca. 7 p.m. Eastern tomorrow. Alfonso will be our main presenter tomorrow night. Yes, every apprenticeship is eligible for a funded account. And once you've gone through an apprenticeship, you can still get other funded accounts. So you don't have to be active in the apprenticeship. You just need to have gone through an apprenticeship. I basically need to know that you've done some training. You're not just somebody who's discovered this off the street and you're like, hey, give me a $20,000 account. And that's just my integrity and the level, the quality of trader that we're sending our funded partner. And they love us. They give us certain benefits and beneficial rules and whatnot because our traders are some of the best. So I don't want to tarnish that relationship with them. We send them extraordinary traders. Now, that's not meant to scare you. If you fail an audition, you fail an audition. That's why it's an audition. In fact, most people fail their first audition, but pass their second. It's like the bar, a professional engineering exam. It's just you got to learn to push the buttons. Now, they've lowered the bar so much. I mean, you really just need 4 trades. And it's not unreasonable with some of the strategies that you're going to be learning. It's not unreasonable to think your first 4 trades will be profitable. And I mean, we're going for 7 out of 10 at a minimum. So you may pass your audition in the first 4 trades and be off into the races. Not a promise, but a prayer. Hey, Leanne. Yeah, Rebecca will get in touch with you. Rebecca will help you out. Nice, Michael. $290 on 3 trades. Come on. All right. I'm so sorry it's so late. But I didn't want to kick Valerie off on her birthday. It was her 40th birthday. She's gone now, so I can say it. I feel literally terrible that I'm going to send her a nice Amazon gift card. I mean, that's about the most vanilla present you can send, but maybe I'll send her a $40 gift card or a $400 gift card on her 40th birthday. $40 is kind of a joke. Does a prior year apprenticeship qualify still for a funded account? Neil, yes. If you've gone through an apprenticeship, you can get a funded account. Now, I'm not going to buy it for you. Like, we're not a funded account vending machine here, but you can get it through us, no problem. But I'd get myself in an apprenticeship. Well, I almost divulged a secret. Tricky as Neil is. Come back tomorrow for a surprise, Neil. All right, I'm going to shut it down here, guys, because I'm getting tired. I want to make sure that we're all ready to rock and roll tomorrow. Blessings and favor on each and every one of you. Thank you for staying late tonight. It was a long one. Hopefully we don't go so long tomorrow night. I know I said that yesterday, but here we are. I truly pray that you'll take this information and put fat stacks of cash in your jeans. I hope you'll do it with one of our mentors because it's the fastest path to success. That's been proven time and time again. But even if you take this and you get yourselves some books and you scour the interwebs for information, I hope you'll take the ultimate trading formula, analyze, strategize, monetize, maximize. Use that to put fat stacks of cash in your jeans so that you can go out and do even more good things in this world. Blessings on you guys. I'll see you tomorrow, 7 p.m. Eastern Standard Time. Take care.